You open your payslip next year and the number at the bottom, your take-home pay, is smaller. Not because you worked less, but because your taxes just went up. Meanwhile, prices are still high, your rent hasn't gone down, and groceries somehow cost more every week. You might think, how can the government justify raising taxes now when everyone's already stretched? And that's the question echoing through the UK's economic debate right now. The government needs more money to fund public services, manage record levels of debt, and pay billions in interest each year. But here's the catch. The economy is slowing. Growth has flatlined, productivity is weak, and households are cautious. So the real question isn't whether taxes should go up, it's whether the country can afford it. Because in economics, timing is everything. Raise taxes during a boom, and the system absorbs it. Raise them during a slowdown, and you risk choking what little growth remains. And that's exactly the dilemma the UK faces today. So what's happening? Right now, the UK's public finances are under pressure. After years of pandemic spending, energy subsidies, and higher interest payments, the Treasury is facing a growing funding gap. The Office for Budget Responsibility projects that debt interest alone will exceed £100 billion this year, more than what the country spends on education. At the same time, public services are stretched thin. The NHS backlog is at record levels. Local councils are going bankrupt, and infrastructure projects are being delayed or cancelled to save money. So when ministers talk about fiscal responsibility, they're walking a tightrope between stabilizing the budget and not crushing an already fragile economy. The government has hinted at possible tax rises, perhaps on wealth, capital gains, or business profits. But that's triggering a bigger question. If the UK's economy is barely growing, will higher taxes make things worse?
As Chancellor, I have to face the world as it is, not the world that I want it to be. And when challenges come our way, the only question is how to respond to them, not whether to respond or not. And as I respond at the budget on the 26th of November, my focus will be on getting NHS waiting lists down, getting the cost of living down, and also getting the national debt down.
Let's break that down. The UK's economic growth has been hovering near zero for months. In some quarters, it's even dipped into negative territory. Inflation may be cooling, but interest rates are still high, squeezing households and small businesses alike. Consumers are spending less, businesses are investing cautiously, and productivity, the holy grail of long-term growth, hasn't improved in years. Now imagine layering higher taxes on top of that. Businesses face smaller margins, meaning less room to hire or raise wages. Consumers have less disposable income, meaning weaker demand. And the government, ironically, might end up collecting less revenue in the long run because growth slows even further. This is what economists call a fiscal drag. It's when tax thresholds don't keep up with inflation or earnings growth, so more people get pushed into higher tax bands without actually feeling richer. In the UK, that's already happening. The Treasury has frozen income tax thresholds until 2028, a quiet move that's bringing in billions of pounds more each year without officially raising rates. So even if the government doesn't announce new taxes, most people are already paying more.
Unaffordable rents, choosing between meals and heating, and tears when the energy bill arrives. Just some of the stories from these protesters. Marching to Downing Street with messages not just for the Prime Minister.
Wages hasn't gone up or anything like that, so I'm relying on my parents to get by.
We just want to be the start of a movement against all this to say enough is enough.
The Bank of England isn't thrilled about this either. Governor Andrew Bailey recently warned that fiscal policy, what the government spends and taxes, has to work hand in hand with monetary policy, meaning interest rates. If the government tightens too much while the bank keeps rates high, the economy could stall completely. The IMF has voiced similar concerns. In its latest review of the UK economy, it cautioned against fiscal over-tightening, saying that while reducing debt is important, doing it too aggressively could risk tipping the economy into recession. Their message was clear. Yes, the UK needs a sustainable fiscal plan, but not at the cost of growth. And yet, from the Treasury's perspective, there's no easy way out. Public debt is over 97% of GDP, the highest it's been since the early 1960s. Debt interest payments are eating up a growing share of the budget, thanks to higher interest rates. And global investors who buy UK government bonds are watching closely. If they lose confidence in the UK's fiscal credibility, borrowing costs could rise even further. So the government is stuck between two bad options: raise taxes and risk a slowdown, or hold off and risk losing market trust. Take the corporate tax, for example. It was raised from 19% to 25% in April 2023, a move the Treasury said would generate £17 billion a year. But business groups, like the CBI, warned that it could deter investment, especially when other countries are offering tax incentives to attract global firms. And indeed, foreign direct investment into the UK has slowed since Brexit. Then there's the question of fairness. Should higher earners and large corporations bear more of the burden? Or should taxes be spread evenly, even if that means higher costs for the middle class? Economists are split. Some argue that targeted taxes on wealth and capital would minimize harm to consumption. Others worry that such measures could discourage investment and innovation, exactly what the UK needs more of right now. Meanwhile, public sentiment is complicated. Polls show most Britons want better funded public services, but few support higher taxes to pay for them. It's a paradox. Everyone wants the benefits, but no one wants the bill. This is why many experts say the UK's real problem isn't just about how much tax is raised, but how it's raised. A more efficient, growth-friendly system could encourage entrepreneurship while still funding essential services. For instance, simplifying the tax code, closing loopholes, and aligning incentives for green investment could raise revenue without crushing productivity. But that requires long-term thinking, something politics rarely rewards. With an election on the horizon, both major parties are cautious. The Conservatives are emphasizing fiscal discipline, while Labour is promising to rebuild growth without big tax rises. Though they've also hinted at changes to the non-dom regime and capital gains tax. So, whichever way you look at it, taxes are going up, whether directly or indirectly. The only question is, how soon? And how hard will it hit? Looking ahead, the debate comes down to trade-offs. If the government raises taxes now, it might stabilize public finances and reassure investors. But it could also slow the fragile recovery, hitting small businesses and households already feeling squeezed. If it waits too long, debt could spiral, forcing even tougher decisions later. For everyday people, this isn't just an economic story. It's about what kind of country the UK becomes. Higher taxes could mean better funded public services, shorter NHS waiting times, improved transport, and more school resources. But if growth continues to lag, those benefits may never materialize, leaving people paying more for less. There's also a psychological side. When people expect higher taxes or weaker growth, they spend less. And that alone can drag the economy further down. Confidence in economics is everything. So, can the UK afford to raise taxes when growth is slowing? The honest answer? Not easily. But can it afford not to? Probably not that either. The challenge ahead isn't just balancing numbers, it's rebuilding trust, productivity, and optimism. Because at the end of the day, this isn't just about spreadsheets in Whitehall. It's about your paycheck, your public services, and your future. Talking about paycheck, affordability, and your future, watch this video addressing the real reasons behind the high cost of living in the UK.